into Talking Point. I'm your host, Neeraj Shah, and the talking point today, at almost, I believe the right timing is to today that we've gotten in Gautam Shah of Goldilocks Premium Research, simply because a lot has happened in the last few days, the last 10 days. We've had a bit of a one-way rally, even though there was an interlude in between, but almost a one-way rally from the lows of 15,200 all the way to today. And therefore, it begs the question about how sustainable or how real is this move? What are the factors to be watched around it? And what are the components of this rally if this has to continue in the times to come? To all of those questions, I'm presuming Gautam Shah would have the answers as he always does. Gautam, great having you. Thanks for joining in.
Thank you, Neeraj. Thanks for having me as always.
No, I actually thought about it, Gautam, yesterday when I made a request that a really good time to get you would have been at 15,200. Be that as it may, let's talk about it now. We've a bit of a water has flown under the bridge. We've digested some bit of bad news about 10,000, 1,100 points rally. Where do we go from here?
Yes, Neeraj. Well, if you had me at 15,200, I'm human. I would have gone with the sentiment and maybe talked pessimistic at that point of time. But if you had me in a closed room, not talking with people, I just thought that at the recent close, the market sentiment was extremely weak. The breadth was extremely weak. And I think with what has happened in the last a few weeks, this is a classical example of the markets climbing a wall of worry. I mean, if I were to just digress a little bit from the charts, which is my forte, talks about recession, inflation, interest rates, the possible COVID surge, geopolitical risk, FI positioning on the cash side, on the FNO side. There's just too many factors, oil prices and USD INR and the dollar index. I've just given you 10 factors which sort of indicated that the markets cannot rally. And here we are, gone up 1,000 points in a matter of 2.5 weeks. I think this beautifully once again tells you that everything that's happening in the markets today is very fast. The market is discounting things very fast, and gone are the days where it takes weeks and months, for things to be discounted. I think there was no point panicking a few days back or few weeks back when we were around 15,500. Because let's not forget the bear market was almost 9 months and the average drawdown on the NSE 500 was 43%. Now that's a phenomenal number. And even if you look at the breadth studies, only 13% of the NSE 500 stocks were trading above the 200-day moving average. The reason I highlight these two factors is because these were the factors which told us that it's getting overdone and the market is due for a recovery which has taken place. Now the big question is, can we build up from here? I've liked the way the markets have set up. The texture is good. The participation is great. Quality is doing well. India VIX lost 5% yesterday. And there are new leaders emerging. When have you seen FMCG and auto lead the market recovery? It's just not happened. So I think it looks good. Our working target was about 16,180, which has been done today. I think if we were to get past this number on a closing basis, then another 3-4-5% up to 16,600, 800 opens up. But I do believe that this is a market where you have to have a bottoms-up approach. You can't look at it top-down. There are just too many headwinds that will not allow the Nifty to get into the kind of bull market that we saw in 2020 and 2021. So stay stock-specific, stay sector-specific. This recovery looks very different to the earlier recoveries, that got sold into and then we went on to make new lows. It's unlikely that we'll do that this time.
Interesting. So, Gautam, borrowing a few of the charts that you've shared with us, you've done a weekly stochastic study, which, as you say, is a good way to understand where the long side opportunities emerge, and it had a flawless track record. So it indicated probably at those oversold levels that it was a great time to get into. Does it still indicate that there is some more time to go?
Yes, I think so. What's happening is people are looking at the Nifty and the Bank Nifty and the headline indices to say that markets haven't corrected so much. We've lost about 20% from the highs. And I have had the experience of seeing the 2003, 2008 bull market, within which we've seen corrections of 25-30%, and we've stayed within a bull market. So I always believe that this correction of the last 9 months was to take away the excesses of 2020 and 2021, because in that period, you had so many stocks going up 5, 10, 15, 20x in a matter of 15 months. And the study that you alluded to, I think it usually takes many, many months for such studies to come down to the oversold level. But since it happened in the last few months, I just thought that the risk reward, you cannot predict the future. You can just take a call based on probabilities and risk reward. I just thought that anything around 15.5 was a good buying opportunity. And even now, when I look at the weekly and the monthly charts and the studies that you highlighted from the big picture report, they're all very well placed, suggesting that there is a lot more legs on the upside.
Except for one thing, and I don't know if I was reading it wrongly, but you pointed out this inverse correlation between the INR and the index. And while there may have been a brief up move yesterday in the rupee vis-a-vis the dollar because of the RBI's moves, it's probably still not out of the woods as yet. So if the INR were to continue depreciating over the next couple of months, you think it will stop becoming as important a factor because it's already played its part? Or how does that work?
See, these textbook correlations were written in the 60s and 70s and 80s in the, in those times when you did not have social media, when the ease of information was not available. These correlations work from time to time, but I think in the last 3 months, it's actually worked wonderfully. An inverse correlation with the rupee and the Nifty. But now I think our working target on the rupee was about 79.90. We got close to that, and we've seen a bit of a cool off yesterday, as you rightly said. And it seems we are getting into that phase where rupee can also start to appreciate, mainly looking at the dollar index, which I thought was also very, very extended. So it's all coming in together. The fall in oil, dollar index looking like it's a climatic move. Rupee unlikely to get past 79.90. So it does seem as if we could be stabilizing. And India VIX 5% fall below 20 yesterday, I think is a big, big takeaway which you can't ignore.
So in which case, my final question on the index per se, and I also want you to maybe talk about the bank Nifty a bit, because banks probably haven't rallied as much as the Nifty in the recent leg. So is there some room to go there? But also the most common refrain, Gautam, when this rally was happening, and I have mentioned it in my trade setup as well so many times, was that everybody believed that this is also going to be a sell on a rise kind of a move, because economically we are not out of the woods. You reckon that may not be the case?
Yes, that's exactly the view. I think that we formed a bottom at around the recent lows. I cannot say with complete confidence because I still want more evidence to develop on the charts. But as I said, the texture of this rally looks very different to the previous attempts of the last 3 or 4 months. And the way the mid caps and small caps are behaving suddenly, let's not forget the market has stopped reacting to bad news. In the last 6 months, whenever you got something negative, the first thing you saw was SGX Nifty and the Nifty coming off. This has not happened in the last 2.5 weeks. So the respect of support levels is usually the first signs of a turnaround, and we've got that. So I really want to be bullishly placed. And, it's only after the markets cross some resistance levels does the public or the consensus at large start believing that, oh, this is something different happening. And as a chartist, I have that little bit of an advantage to get it a little early.
Yeah. What about the banks? Can they lead this up move if we were to go to those levels of 16,800 that you believe are the top levels for July?
Well, banks, I thought we're at an inflection point because as I presented in one of my charts, 32,500 was such an important support on the Bank Nifty based on multiple technical studies on the weekly and on the monthly charts. And I'm very happy that the index respected that number and we've seen a turnaround. I still don't have a great setup on the Bank Nifty. Yesterday, it got past 34,500, so that's a good sign. And there is room for about 36,000, 36,500. But when I see the standalone charts, I don't see leadership coming there. Okay. And HDFC Bank is turning around from the lows, which is good. And ICICI Bank is coming back. SBI is coming back. So some of these stocks are coming back, but they've not created foundations. At the end of every bear market, there is a foundation. There is a base building process before things turn up. And that's exactly what has happened in auto and FMCG. So I think banks and IT, which were the poster boys of the last recovery or the last bull market, I think could have lost leadership and they've passed the baton to some of the other sectors.
IT too, you are saying?
Yes, IT too.
Okay, so you don't reckon that Nifty IT can make a move even if the results are good? The charts don't show that there is a strong up move possibility.
See, the risk reward suggests that you should be a buyer in IT here. I think no doubt about that. All I'm trying to say is that the outperformance is not going to come. And I think a glimpse of that happened in the last 7 to 10 days when the Nifty gained 1,000 and the IT index is still pretty much languishing at the recent close. So I think the money has already moved from some of these names to FMCG. Look at what HUL, ITC, people joked about it at 200, 210. Today we are at the doors of 300. That's a 50% move, in one of the largest stocks in the index and probably one of the most safer stocks in the index. So leadership is clearly changed and your portfolios need to be aligned to that.
Yeah. Viewers, I must say, it was maybe during one of these conversations or on a BQ Edge event, wherein Gautam had mentioned ITC, I distinctly remember, was sub 210. And he said that he sees 300 on the charts. Even I had smirked at that point of time inwardly that, yeah, ITC moves $5 and then gets sold by 10, 15. But I mean, maybe the time frames might have gotten extended a bit, but the call is proven to be right. So therefore, my question on FMCG, Gautam, and I'm happy that I've been proven wrong on ITC, but FMCG at large, Gautam, you reckon the up move might still continue?
It's quite incredible that the Nifty is still far, far away from its previous highs, and the auto index is at new lifetime highs. And the FMCG index is, I think, less than 5% away, or I think 3 or 4% away from their own lifetime highs. So I think there is clear relative strength that's playing out. And let's not forget, apart from ITC, there are many other names which have been languishing for the last 12 months. Case in point being Hindustan Unilever, which suddenly has one of the more amazing charts among the index stocks. So I think they have been underowned, they have been ignored, and they are now coming, in the forefront. And I think more and more investors will seriously look into them. So the entire basket looks good. Our working target is about 42,000. So that's a near-term level. Once that is crossed, I think even a 45,000 is entirely possible. So a 12% upside on the FMCG index is doable with strength across the board.
Yeah, but leadership, okay, strength across the board. So even if an HUL or an ITC may show leadership, you believe the others will also participate. It will be a higher breadth up move in the FMCG space.
Yeah, I think that's what has happened in the last 2 years. When a theme does well, everything does well. Look at what's happened to auto ancillary. You just need to have that name. It just reminds me of the tech boom in 2000. I'm not saying that that's happening, but that's how Indian markets are, and that's how sentiment works. But the problem is ITC and HUL are 40% of the index. So if you have to play the index, you have to be substantially invested in these two names.
Yeah, and fundamentally as well, right? Monsoons looking normal, commodity costs coming off. So every commodity user industry, and autos and FMCG fit right there, are probably ripe for an up or ripe fundamentally to gain. You reckon there is more strength in autos? We're seeing that in almost every single company, so to say.
Oh, yes, there is something incredible happening. To be honest, I cannot join the dots, because when I speak to many of my fundamental analyst friends, I don't see any major triggers that can call for such outperformance. And it's been across the board. It's looking great. Auto ancillary as a basket, I think, is absolutely hot. And there is a lot more to go. And even if you look at the top names, I think M&M has been on top of our list. Maruti is broken out after almost 6 months of difficult action. Bajaj Auto, I think, needs to get past 4,000. Tata Motors, I think, just does not have too much downside. So I reckon that 12,000 being taken out of the auto index is a mega multi-year, breakout, something that happened in many other sectors long time back. And I think 10, 15, 20% upside over the next many months is doable. So this looks like a sustainable move.
Yeah, I mean, a factor, Gautam, that for the last 4 or 5 years, we may have had false breakouts, but they were false in nature. Almost 5 years of an underperformance. Is that a factor which might be aiding this, what you termed as incredible in the auto space?
Yes, looks like. And I think that's pretty much applicable not just for autos and FMCG, but also for real estate. When something goes through very, very difficult times and the earnings continue the way, they have been, and these are top quality brands, and then there is a slight shift between growth to value. I think that's really happened in the last 6 months, because last year in October, anything and everything was getting sold into. You could be an 80p, you could be a 100p. It was justified based on Excel sheets of the next 15 years. But I think this bear market of the last 9 months has changed all of that, and rightly so.
Yeah. Interesting. So therefore, well, real estate, maybe Gautam, slightly different kettle in that we've seen some performance from these stocks for the last 24 odd months or 18 odd months, at least, if not 24. And fundamentally, there is a backbone of higher sales as well. You think that momentum continues after 18 months of an outperformance already behind us?
I think so, Neeraj. I think the best is yet to come. It will go on and make new not lifetime highs, make new 52-week highs at least. I shared a chart in my big picture report where I showed how the index broke out of almost a 12-year band. And after breaking out of that 12-year band, the support that we were working with on the real estate index was 365. You'll notice in the last 3 weeks, we've rebounded exactly from that number, and now we are doing well with the top stocks, shining once again. So I think this is a mega medium-term opportunity. It got a little overdone on the upside, last year when, we were just extrapolating too much. It's after all high beta. If the Nifty falls, real estate will fall. It cannot move, the other way. But overall, medium term, long term, I think the risk is about 5-7%, and the upside is easily 20 to 30% on an index level. So I think stocks will do much better.
Okay, a last couple of questions, Gautam. One is a space which has moved completely contrary, right? Significant underperformance in the last 1,000 points of the Nifty, the metal space. Yesterday was the first day of some bit of a pullback of sorts. What's your sense from on this topic?
I think it's lost its charm, Neeraj. I think it's done its bit. It had a phenomenal 2-year run. It's known to be a cyclical name. People thought it was secular, but the metals always come back and fool you, and that's what they have done. I mean, some of the top stocks losing 40-50% in 6-8 months, just reminds you of those old days that we've seen for metals. So I'm not a big fan. Yes, they could see a bit of a rebound because the fall has been huge. So there could be some short covering led rally. But as I said, leadership has changed. It's not about banks, metals, or IT. It's about the other sectors. And not to forget mid caps and small caps, which for the last 1.5 months I've been saying is one of the best buying opportunities since March 2020. Go out there, buy a basket. You will make money if you have a 12 to 24 month time frame.
Yeah. So I was going to save that question for the last. I just remembered one sector which I thought I will ask you, even if it means I keep you for a minute longer than promised, which is upstream oil and gas. Friday took them to the cleaners. The PSUs more so than Reliance, but is the zing out of the space or can it bounce? And also, maybe if you have a view on crude, because that's also had a significant thing. We haven't spoken commodities at all, Gautam. Excuse me for that.
Yeah, crude, I think, topped out at 120.25 chartically. It's a very dynamic world, so I don't want to thumb the table and give that call. But based on the evidence, it seems as if it will get stuck in that 85, 120 kind of a band, which is great news for India. So that's what it looks like. And with what happened on Friday with PSUs and Reliance, obviously, it spoiled the chart setup. PSUs take a lot of momentum to come back. And this is a market where you have immense opportunities in the broader markets. So why get stuck with some of the top 5 PSU names? Yes, if you are an investor with a 12, 24, 36-month horizon, go ahead and buy PSUs, you'll make money. But if you're looking at momentum, PSUs and maybe even Reliance, which has lost its sheen just a little bit and lost its leadership just a little bit, I think they're going to underperform for a bit.
Okay. So then what about mid caps and small caps? You reckon they can outperform?
They will. I think the kind of breadth data that you saw on the small caps and mid caps a couple of weeks back, I think was phenomenal. It just told you that it was extremely oversold. Anything and everything was getting hammered. And now we've seen a gradual turnaround in the mid caps and small caps, and the potential to rise is substantial. I would even stick my neck out and say that sometime over the next 12 to 15 months, you will see the small cap index go back and test lifetime highs. It might seem a little foolish right now, but that's how the charts are getting placed. We'll take it one step at a time. I think that's the best way to look at it. But as an investor, even now, despite the rally of the last 10 days, even if you were to get in on any small dip, I think you'll do well, because the headwinds, the global and the local headwinds will keep impacting the Nifty and the top 50 or 100 stocks. But mid caps and small caps will do their own thing because there is a different story. But please stick to the industry leaders and challengers. That's the best way to commit your money.
Gautam Shah, before we wrap up, if indeed we are to move higher, I'm sure you keep risk reward into perspective. So coming back to the index, therefore, and I buy your point that specific sectors and mid caps, small caps could do well. But coming back to the index, where is it that you would typically place the cushion of some stops into whatever theme or the index, as you may want to speak about?
Yeah, so good question. I think we need to keep risk management in mind. So if you're talking about the Nifty, where I would change my stance, I think that would be below 15,700. I think that's become the important number from a trading perspective. And for investors, I would say 15,400 is now as solid as it gets. And until we don't get below that number, I think this is a market which is now turning into buy on dips.
Great. Gautam, this was lovely talking to you. As I said, I wish I had gotten you slightly earlier, but nevertheless, it was lovely today as well. Thank you so much and look forward to talking to you more often.
Thanks, Neeraj. Thank you so much.
The pleasure was ours. Viewers, thanks for tuning in.